Hi everyone, this is Native Trader here for another After Action report. Today is Tuesday, November the 19th, and I want to show you how to take a trade on Exxon, XOM. How do we make money? How can you make money off of the open when it's volatile and when there's risk? Well, the answer is very simple. We use controlled risk with volatility to make money. You can make winning trades using a trader's best friend, which is volatility off the open with controlled risk, a 1 bar stop loss. That is your controlled risk. And I'm going to show you how you can achieve this. All right? So let's get right into it. What you're looking at is a 15-minute chart. This is Exxon for today. The chart here is actually the close, just before the open of Tuesday, but the close of Monday. So before we take a trade, we have to have what I call the opening zone. The opening zone is going to consist of a couple things. First and foremost, it's going to consist of your 20 moving average. That's your first thing. 20 moving average is this blue line right there. We're going to draw a line out like that with that. The next thing we're going to do is we're going to find our 200 moving average, which is going to be right here. 200 right here. Okay. That's not showing up too well. Let's just do this. 200 right here. Boom. 200. 20. Okay. You go half hour back in time, you find the lowest point right there, highest point right there. This is your zone. 4 things consist of the opening zone: the 20, the 200, the half hour back in time of the lowest calculated price, and a half hour back in time before the close of the highest calculated price. And this makes up our zone. We do not trade anything in this zone, okay? We just don't do it. It's not to be trusted. So what happens? What happens when the actual trading day begins? Well, anything that's below here, we're going to go short. Anything that pops above, we're going to see if we can go long. It's really that simple. So let's see what we have. And boom. Look at that. Look at what we had today. So mark that right there. Mark that right there. That was our opening zone. We do not make trades here in the opening zone. Nothing, nothing, nothing. And look what happened. The first bar of the day. The first bar of the day gave us a red bar. Right there. 2 lots. You're in. If you don't like that, you could wait until you get confirmation. When this red pierces this line, which was the close of the first bar, when that red candle begins there, you could have also gotten in there. Okay? That could have also been another entry point right there. Your stop would have gone right here. 1 bar stop. If this trade goes against you, you're only losing 1 bar. Or, because it did gap down, you could have put your stop at the 20. Somewhere up there. But this is where your stop, I'll spell that out, stop, would have gone today. Stop right there. Okay? As you can see, when we got in right here, price continued to go down, go down, go down, go down. You could have gotten out here. That's a good place to get out. You're out for 2 here. Okay? You're out for 2. If you wanted to, you could wait. And what do we do? What do we mean by wait? Since we're in negative territory, we could have waited for this one right here. right there. See that right there? When you have a removal of red in negative territory, let's see, removal of red right there. Could have been in for one. Could have also been in one for here. Right there. Right there. And this is the direction it went in. Okay? So let's review. Let's review what our trade looked like today. Before we even have a trade, we have to create the opening zone. That's going to be right here. 20 moving average all the way out into infinity. What's the lowest point of the last half hour of Monday, the previous trading day? Right here, right where the 20 is. So we're fine. What's the highest point? Highest point's going to be right around here. And finally, where is the 200? The 200's right about there. No trades are in here. None whatsoever. Okay? None. If price breaks down this way, we go short. Okay? If price goes up this way, we go long. Okay? We play probabilities. Probabilities. That's what we do in this business. It's what we do in this game. First candle of the day. Red. Negative territory. Negative territory below the 20, below the 200. This is a strong buy. 2 lots. Okay? If you wanted to, you could have also added right there or gotten in. This is another entry point right here. Both are fine. Whichever bar you chose, your stop is going to be 1 bar above right there. Okay? If you're in the opening bar, right there. If you're in this bar, second bar, still 1 bar above. This is where your stop is. Okay? Stop. Okay? Very critical that you have a 1 bar stop loss. That's your stop loss right there. Okay? If you wanted to, now we wait. We wait for price action to come down, come down, come down. This is a great point to get out right here. Take some profit right there. Why? Because you have separation from here to the 20 and from the 20 to the 200. You have a lot of separation right there. That right there. Whenever you have separation like that, it's time to get out. It's time to get out. So, take profit. Okay, we do this for money. We put food on the table and we support our families this way. You take profit. I would have taken half off. Take 1 right there. That's your profit. Immediately, after we take profit, our next rule is we rotate our stop loss to break even. Break even is the point of entry, or if you added on your trade, the last add position. That last point right there. This is your new stop. Here, we've rotated the stop down. Now we have a free trade. If this were to reverse on us and go all the way back up here, you're covered because you've already made profit and your stop loss is here at break even. This is now a free trade. You understand? Okay. If you wanted to, with the 1 that you're still in, if you wanted to, okay, while you're in negative territory, it reverses, bounces up a little bit, and then right here, where this green bar is, that got eliminated by the red right there. Bam. You're in for another one. Okay? Let's say you didn't get in that one. You could have waited for this one too, if you wanted to. Okay? Because you're close to the 20. When that green gets eliminated by this red, you could have been in here for another one. Okay? Either one of these add points is sufficient. From this point, what you could have done, You could have waited. You could have rode this down. You could have rode this down to here. Okay. Dumped out the one. Dumped out your one. Your remainder from here went to here. Your new stop gets rotated down to there. Here. Or the stop gets rotated down to there. Either one, depending on where your last entry was. Your stop always goes down to your last entry position. This again ensures that we have what? A free open trade. That's what this assures. Okay? This is why we do this. Price goes back up here, comes back down. If you wanted to from here and you were still in, you still have this one entry from up here that you're in. You could rotate the stop down to two places. You could roll it back down to here, or if you wanted to, you could put it here and rotate that stop here. Okay? That's your new stop. This ensures that you made a profit off your last entry, right? Stop. Okay? That's your new stop right there. If you wanted to, you could get out here. Or, as you can tell at the very end of the day, price does come back up. Maybe you got stopped out here. But that's how you trade Exxon today. This is how you trade professionally. Follow the steps. Opening zone. We wait. We wait for price to go above, we go long. If it's below, we go short. We ride it down. 1, 2, 3. This went down 4 pushes. I like 3 to 5 pushes, somewhere in that range. Minimum of 3. 4 is even better. Okay, if we got in here, or we got 1, 2, 3, 4 pushes. If we got in here, 1, 2, 3 pushes. It's a long ways away from the 20 and the 200. Takes them off the table. Rotate the stop. Then we wait. Since we're still in negative territory, you had 2 other opportunities to add to this position. Here, when the red removed green, or here, when red removed green. Okay? Comes down here. Boom. We could have been out here, out of the trade. Or if we waited for here, could have also been in it as well too. It all just depends on what we want to do. It all depends on how we want to trade this. But this is how you trade professionally. This is how you make money. I'm Native Day Trader. Thank you for watching. If you found this useful, share it with someone who might be of use to it. Until then, keep trading.